The views and opinions expressed on this program are not those of Norfolk State University or WNSB-FM. Thank you for listening. Hot 91, your choice for hip-hop and R&B soul. Hey, yes. This is the voice of Kilo. You already know that. And you know, it's time for a brand new episode of Hampton Roads Voices. Yes. And this week, we were kind of advertising it last week, but we're really doing it this week. We're talking about taxes. Yes, it's tax season. Girl, did you get your taxes back? I know you did because you're out there buying stuff up a storm, stuff that you don't even need. Listen, every single year we do our taxes and, we go down to, I'm not going to say no names, but, our local tax, income tax, services chain, if you will, in our Walmarts or, just in a strip mall. And we just say, hey, file my taxes so I can get my taxes back. But do you really know, the ins and outs of your income taxes, why you do it, how to do it? You know what I mean? You're just kind of giving everything to somebody else and kind of putting your whole life, if you will, to somebody else, hoping that you just get some money back. But we are here today to try to, educate you a little bit. That's what Hampton Roads Voices is all about. So tonight's episode is entitled Tax Season. Yeah, because you have until April something. We're gonna find that out today because I don't even know April something in order to get those taxes in. All right. So just like every single episode, we have special guest experts in with me today that's gonna let us know everything there is to know about, this tax season. So we have the founders of PC Financial Services, LLC. We have Terrion Conyers. Am I saying that right?
Yeah, Conyers.
Conyers. All right. He's a tax consultant and the co-founder of PC Financial Services, LLC. And we also have Larry Pendleton. I'm saying that right, sir?
Yes, ma'am.
All right. Sounds good to me. He's a CPA. That stands for Certified Public Accountant. And he also is a founder of the PC Financial Services, LLC. Hello there, brothers. How you doing today?
Good, good. How are you? We're feeling good. Great to be here. Thank you for having us.
Thank you for being here. I really appreciate it. So, first and foremost, let's get into who you are exactly, why I invited you here today. Tell us a little bit more about your profession and how you got started with PC Financial Services.
Okay, so I'll start off first. My name's Terrion Conyers. I'm a William & Mary graduate, graduated 2010. I majored in economics and business, small business accounting. So I'll let Larry introduce himself now.
Larry Pendleton, also went to William & Mary, graduated 06. One thing Terrion forgot to mention was that we're both Norfolk locals.
I know that's right.
Booker T alumni, so we're right across the street. Yeah.
Ooh. So how did PC Financial Services come about?
So how we came about was Larry and I both started out helping family members. So I've been helping family members and friends just with their financial taxes and financial literacy in general. And, Larry has been doing some of the same things for over, a decade now, Larry?
It's about a decade. Like I said, once I graduated 06 and started working in public accounting, I was definitely jumped into the world just helping friends and family and kind of extended friends from there.
Yeah, I mean, Larry, I came to Larry one day. Larry's a little, like 4 years older than me, so he went to Booker T before I went. Then he went to William & Mary before I went, but we always kind of had the same path, so we kind of connected. And we just came together and said, hey, man, it's time for us to start helping our community.
Right.
We've been helping corporate America for quite a bit now. It's time to, put some of these skills and resources that we have back into our community and help the people around us. So that's when we started.
Yeah, and I'll tell you what, when I was doing my research, we always got that cousin or that auntie who, do taxes on the side.
Yeah.
And, of course, I came across a lot of that on Facebook. And that's no shade,
Yeah.
You helping,
No shade.
you helping your family members. But when I came across PC Financial Services, I saw a website that looked very professional.
Absolutely.
I saw, everything just looked right and it looked professional. And of course I saw LLC, so I was like, okay, these brothers got it together, and this is who I would like to be on the show to help our people. Now, we have all types of listeners, but our core listenership happened to be African Americans, 18 to 50 something, in that adult range. So I thought it was important to have, especially about taxes, to have people from our community to tell us about our money and our finances and our taxes, of course. So super excited for you guys to be here, and super excited for you, Hampton Roads, to be listening. Okay, so 757-823-9110 is the number. Of course, like every week, we want you to put your 2 cents in. All right, so I said 2 cents. It's 2 cents. Lord Jesus. 2 cents in.
All love.
So I'm going to go ahead and throw out a question to you, Hampton Rose. What is the most frustrating part about filing for your taxes? I want to know, what is the most frustrating part about filing for your taxes, okay? And also, if you have any tax questions like, can I file this person as my dependent? How much money should I be? Any tax questions, these guys are here to help you. Terrion and Larry are here to help you and to answer those questions for you. So we're going to take a quick break, and when we return, hopefully, we'll be talking to you. 823-9110 is the number to get your tax questions in. It is Hampton Rose Voices, brand new episode entitled Tax Season on Hot 91. It's Hot 91, your choice for hip hop and R&B soul. Kilo is here with Hampton Rose Voices, a very new episode entitled Tax Season. Yes, all about our taxes. And you know, sometimes the only thing we care about when it comes to these taxes is getting them back. Okay, so we be trying to file this person and she a dependent, so I need to file all my kids so I can get the biggest return ever. But do you really know what's happening with your tax returns and why you should keep them and what you can use them for? We were having a conversation off the air, and Terrion was telling me about how, you know, tax returns are important when you want to be a homeowner. So we'll get into that in a bit. But I want you to call in with your tax questions, 757-823-9110, any text questions that you have, and I pose the question to you. What is the most frustrating thing about filing your taxes year after year? You know what? You dread it because it's just one thing when it comes to these taxes. I want to know. Call in and, you know, let's get talking. Okay. So we do have a phone call. So let's get to it. Hi, 91. You're live on the air. Who am I speaking with? Hi, 91. You're live on the air. Who am I speaking with? Hello?
Hi.
Hey, you're live on the air. Who am I speaking with?
Renita.
Hi, Renita.
Hi. Thank you for taking my call.
No worries. Thank you for calling. What's your question, comment, or concern?
Yes. I moved to Virginia in 2012, and I'm a retired military veteran. And my kids are grown. I mean, since I've been in this state, some states do tax, include military income as your military retirement as income. And it's made me, every single year I owe every year. And I was just wondering, are there any loopholes, any suggestions that they may have as far as, you know, trying to get around this? Because every single year I owe because of my military retirement. And I know some states do not tax military retirement or include it as income to your primary job. You know, so they always add it in to make your income and to put you into a higher tax bracket, which makes you owe every year here in Virginia. And I was just wondering, are there any future plans that they may know of as far as exempting military veterans that are retired that receive retirement income? Do they know if there's anything coming up in the future that they may do away with that? Because I know a lot of states don't tax military retired pay.
That's a good question, especially with our heavy veteran and Navy people that are around. Larry, you want to take it?
Yes. How you doing, Renita?
Hi.
So, to my knowledge from researching the new tax laws that came out, there's no exemptions coming up that I'm aware of. Only thing you can do to kind of work around that is somewhat up your itemized deductions or your personal deductions. So that's basically what be on your Schedule A. So medical expenses, charitable donations. I'm not sure if you own a home, but your mortgage insurance, any expenses out of pocket that you pay. I know you're retired now, but as anything you pay out of pocket for work-related reasons, if you do have a side job, or if you have a business, what we do recommend a lot to our clients is to start your own business, become entrepreneur yourself. There is self-employment taxes that do apply, but there are many deductions that you can write off, home business deductions, mileage, so forth and so forth. And that would be the next step for you, is you want to avoid that and become an entrepreneur and take advantage of those deductions.
Yeah, and I just want to add to that as well, Ms. Renita. How you doing today?
Yes, I'm doing fine. Thank you.
So one of the things that, like I said, we try to educate people on is the difference between a business and a hobby. The IRS states that a business is anything that you do with the intent earn a profit. So one of those things that you can do is, I know that you're retired now. I'm sure you probably have a hobby or something that you love, but turn that thing into a business, that thing that you're passionate about, turn it into a business. And like Larry said, there are a lot more tax, not per se loopholes, but tax advantages for you turning that hobby into a business. It allows you to expense a lot of things that you can get with your personal tax consultant or tax professional, and they can kind of break that down to you. So that's been really huge for a lot of the people that we deal with that are retired, that are military. We've been able to turn some of the things that they did in their spare time as a hobby to small businesses, and they've been very beneficial to those people. I will say that.
Okay, great, because I am working still, but I'm retired as well, so I still do work.
Okay.
It's just, and I haven't decided to purchase a home here because I haven't decided whether I want to stay because I can't get around this. And every single year I'm on lots of money.
Real estate, you have to buy a home. Once you get to a certain financial, once you get to a certain financial plateau or a certain, income level, you have to do certain things. And real estate is one of the ways that you can protect yourself.
At least reduce it.
Yes, you can definitely reduce it with the mortgage interest and things that you get off of purchasing a home. So those are some of the things you can do. And, like I said, we're here. We'll leave our information at the radio station. We also have a website, www.pcfsva.com. You can schedule an appointment on our website, or you can call us. We're here for you 24/7.
Okay, great. I do appreciate it. Thank
you so
much.
Juanita. You have a good one.
Thank you for calling.
Thank you for taking my call.
Yes.
Happy Easter.
Yes, ma'am. Happy Easter. We want those calls to continue coming. 757-823-9110, 823-9110. Give us a call for any of your text questions. As you can hear, I got some very knowledgeable special guest experts. Okay, so let's get to the conversation, okay? First and foremost, when are taxes due this year? Because I don't know.
Typically, they're due April 15th, but April 15th falls on a Sunday this year. So they're now due Tuesday, April 17th. The reason why they're not due April 16th, which is the Monday, is because it's a D.C. holiday for when they freed the slaves.
Yeah, Emancipation Day. So it's recognized in D.C.
That's what's up. All right.
That's just for federal. For since we're just talking for state, for Virginia, that's actually due May 1st.
Oh.
I can never understand why, in all my years of doing this, why most states do 15 days later, but that's the due date for the state of Virginia is May 1st.
Also, too, people, just one quick note: if you pay your taxes late, there is a 0.5% per month of interest that you pay on whatever you may owe. If you're in a situation where you may owe, just be in mind that interest is accrued after those deadlines. So make sure that you pay on time. If you don't, calculate that interest that you'll have on a monthly basis into your payment as well.
So would you suggest that we just go ahead and get everything in by April the 17th?
Absolutely.
Yeah.
Yes, absolutely.
Instead of worrying about federal and then state and all that stuff. So Tuesday, April the 17th for federal, and then May the 1st for your state. So I do know that we can have a tax deadline extension. Who is eligible for that, though? Is that for special needs or?
Actually, everyone's eligible for that extension. So you get a 6-month extension. So for federal, that would be October 15th, and then for state, it would be November 1st.
What?
Yep.
So
wait to November? Wow.
Yes, but
interest.
Yes,
but interest. Okay.
No, but if you still have to file before the original due dates, and if you owe on those due dates, you still have to pay on April 17th. So if you owe for federal, and April 17th, you still have to pay, but you can refile if you file the extension.
Yeah.
And then you may get some money back depending on what other information that you found. So most people are filing extensions because they're waiting on investment information to come in. Their W-2 was incorrect, so they got to get that redone. So you have to file an extension or your regular tax return by those original due dates.
Yep.
Gotcha.
So you're basically putting an estimated amount into your tax 1040s and things like that. So you're sending them an estimated, hey, this is what I think it's going to be.
Okay.
But I need an extension because I have this, and that going on with my taxes that I'm waiting on.
Gotcha.
So that's what the extension is essentially for.
Who do you see usually need extensions in your line of work?
Business owners.
Mm-hmm.
Yes.
Yeah, especially because they got 1099s. They come in, especially contractors.
Yep.
For real estate properties, and like they the ones they're trying to get with their investors, get that information. They have to file an extension,
Yep.
and then they can get everything situated over the summer and file before the extension deadline.
Yeah, we deal with a lot of small business owners and a lot of personal taxes as well. But a lot of times, people who own small business and stuff, they're ripping and running, chasing a dollar, and a lot of times the tax thing is, kind of put on the back burner until the absolutely last minute.
Right.
So that's why we do a lot of extension.
I mean, to piggyback off of that, if you really look at the tax laws, and I know people complain about it, but it does support entrepreneurs because of what he just said.
Yeah.
The extension piece is really for them because they're normally the ones that are late because they're trying to gather all this information from all their businesses. But if you truly, and I know people are not going to, but if you really look at the tax laws and like who it truly benefits, it's truly investors and big business owners. I know for the everyday person, they don't want to hear that, but that's what the government wants to promote, encourage entrepreneurship to everyone. So everyone's had access to these benefits and tax advantages. It's just we have to take that step.
Right. Yeah. Okay, so we're going to take a quick break, but we are far, far, far from over. When we return, we're going to be talking about how the tax quote-unquote professional you're going to is actually legit, actually reputable, you're in good hands. We're also going to be talking about some common tax mistakes that you could be making, things about unmarried dependents, everything that you need to know about taxes. But if you have a question right now because you about to get out the car and you know what, Kilo, I have to know now, give me a call, 823-9110, 823-9110, and keep it locked. It's Hampton Rose Voices on Hot 91. Hot 91, your choice for hip-hop and R&B soul. New episode of Hampton Rose Voices entitled Tax Season. Yes. Brother, I know you got them taxes back. I can see you got them new rims. Okay, your windows tinted. You ain't had them Air Maxes before that check drop. I see you. But listen, on a serious note, us as an African American community, but even just a community all together, we have to know what's really going on with our money, with our finances, especially in the season of filing our taxes. We kind of just go to our neighborhood tax chain and give them our W-2s and give them whatever and be like, here, do your thing. This is my account number and I expect the money. But do you really know, why you're filing your taxes, how to do it, making sure that you're following up behind that professional to make sure that they're doing their job correctly, and what you have to do with those receipts and the tax return information that you get back. All of those things are really important if you do it the right way. So this is why we have special guest experts here. We have Larry Pendleton. He's a certified public accountant and also the co-founder of PC Financial Services, LLC. And Terrion Conyers, he's a tax consultant and also the co-founder of PC Financial Services, LLC. And they have been helping us all show long. But of course, we still got some more show to go. And we have you, Hampton Road, 757-823-9110. We want your tax questions in right now. Or if you just have, something to get off your chest. If you tired of your auntie filing your child as a dependent, getting all the money and not doing something, we just want to shake the table a little bit. So if you like to shake the table, give me a call, 823-9110. We do have some phone calls right now, so let's get into it. Hi, 821, you're live on the air. Who am I speaking with? Hello.
Hi.
Hey, you're live on the air. How you doing?
I'm fine. How are you?
I'm doing good. What's your name, if you don't mind me asking?
I'm Reese.
Reese?
Yes.
Hey, Reese. What's your question, comment, or concern?
My question is, a lot of people have student debt, and with the programs that they're giving, the debt forgiveness program, I just wanted to know, how does that work with filing your taxes? Because they tell you don't file your taxes because they're trying to collect money. You have to pay off a certain amount before they run your credit to find out if it's okay to file your taxes. Have y'all heard about that or anything on that?
How you doing, Reese?
I'm fine. How are you?
Doing good, thank you. I have not heard anything about someone telling them not to file their taxes. The thing with cancellation of debt or forgiveness of debt is that some debt is still taxable, unfortunately, because people file a lot of paperwork in order to get their debt, especially consumer debt, credit card debt, mortgage interest debt, stuff like that, where they try to get it canceled, and unfortunately, in certain situations, they do not allow you to not report that on your tax return. So, student loan debt, credit card, consumer debt still has to be filed with your taxes.
Okay, so basically, it's just student loans. I don't own any credit cards.
Yeah. So. Yeah,
like I said, yeah. If it's just student loan debt, then there's like special circumstances where they will bypass it or exceptions to having to report it. But more likely than not, any forgiveness of student loan debt, student loan debt will have to be reported on your 1040.
Okay. Okay, then. Well, thank you so much.
Thank you for calling. All right, let's get to our next caller. She dropped. Okay. Call back, 757-823-9110, 823-9110. I know you have more questions. All right. So, Terrion and Larry, like I said before, sometimes we have our cousin and them that want to file our taxes for us. You know, they post it on Instagram. Filing your taxes, 2-for-1 special. How can we, besides that, because that's pretty obvious, but how can we ensure that who we are trusting with our taxes is actually a reputable tax professional instead of like a scammer?
You can do a few ways. For two lookouts that we always tell people. Anyone that can promise you a refund without looking at your return, probably someone you should have your eyebrows up at. and then also too, anyone that doesn't fully explain how they got you tax deduction and exemptions is a person that probably is not a tax professional. In order to, legally file taxes for people, you have to have an EIN, ERO, just some things that you have to basically file with the Social Security. File with the IRS in order to be considered a tax consultant or certified public accounting. They also require people to make sure that they take refresher courses. You have to stay up with the current tax laws, and there are also checks and guidelines that you have to check in with the with the federal government with. They also do fingerprints and things like that for people, just to make sure that people are not out here doing a lot of fraud. I know a lot of people who've gotten their taxes done over the last 2 years. They're getting things in the mail from the government asking them to send in their IDs or your last year's adjusted gross income. I'm sure some of the viewers out here have seen a lot of that in the mail. It's a lot of that going on over the last 2 years. I know we've had a lot of clients who call us nervous. Hey, why are they inquiring about my ID and my last year's information? But it's just because it's so much fraud going on out here.
Make sure.
They want to make sure that the people are actually, the people who are saying that they're, getting a refund or paying a certain amount of money to the federal government are actually, who they say they are, essentially.
And that's great, because if I'm giving you my money, that's just a lot of trust in people. So I'm glad that those requirements are set in stone. Do you need a license, like with the depot or something like that, like a real estate agent or contractor or whoever? You need a license or no?
No, I wouldn't say you need a license,
Okay.
but there is the ERO, like certain identification that a tax preparer has to have in order to legally say they we're basically paid preparers. Like, people are paying us to prepare their returns. There are certain requirements that we have to file every year in order to do that. And to kind of piggyback off of Terrion, is basically, you have to remember is that you're still liable. Like, even if you went to someone, you went to a professional, you're just as liable about what's being reported on that tax return as we are. So, and if you go to someone who's not reputable and you can't find them once,
it's real.
What?
And you have to understand this as well. Like, for a tax professional or whoever you get to do your taxes, they'll pay a fine. They don't have to pay the entire amount. So if you get $10,000 back and the government says, hey, let me see those expenses that you said you had, you have to pay the $10,000 back. The person that did your taxes, maybe a $200 to $500 fine for them.
Wow.
right?
But it's not the same, so you have to be very careful. We tell people, it's a funny story. When I was in college, I had a little car. I was paying personal property tax like $200 a year, and my friends were like, "Hey, let's go to this guy. He can get us this back and get us that back." So I was like, "All right, let me go." I had my little job, so I went to him, and I was like, "Man, that's not enough." They told me, "You give me this." So the guy was like, okay, let me work my magic.
Oh,
so
Lord.
this is before all my, accounting and tax classes and stuff like that. So I was like, all right. I was like, I need more. I'm squeezing them, trying to get out what I can. So I got it. I was like, okay. I got my little couple thousand or whatever. So, I spent my money. So my personal property tax came back that year. So at first my personal property tax was like $200. So I get a tax bill from the state for my personal property taxes. It was $900.
Wow.
So I'm like, I'm going down to the city treasurer, like, why am I paying $900 when I pay $200 a year? So they said first of all, you need to talk to your tax professional. So what they said, your car that was considered first a personal car is now considered a business cost expense. So what happened to me was that in order for him to increase my return, he increased the amount of mileage that he claimed on mine. And if you go over the 50% threshold on personal mileage versus business mileage, then your car is considered a business expense. So you'll get taxed. Your car gets taxed at the business at the business level.
Yeah.
So it's just those type of things, and that's the reason why we got into business. Being able to educate people. Okay, you want a bigger return, so let me tell you what it's going to cost you. This is what and you allow people to make those decisions for themselves, because he just left me in the dark. He he didn't have any. He just put my information into a computer, just like some of the change that you have, because it's just another number. They have a quota that they have to meet and things of that nature, and it's not a personal feel to what what's going on for these people. So
823-9110, 823-9110 if you have any tax related questions, and I know that you do. So just more on the tax professional. So when I go to see a tax professional, what are some of the questions that I should be asking? Either is one question or two questions, like your EIN, I think you said, or something like that. What should I be asking them?
So
I mean, you don't have to ask those particular questions. It's really okay, let me see my tax return, and why do I owe, or why? Of course, everybody wants to know why they owe, but nobody really asking why am I getting a refund, and have him or her explain to you, okay, here's where we got you to this point. You claim these deductions, you qualify for this, so forth and so forth, and they should be able to explain to you how we got from A to Z, and how you got whatever refund. Yep. Because like I said, at the same time, if you owe, everybody wants to know why they owe. And
right.
You have to have that same mindset with a refund.
And the worst thing that can happen to you is get a nice return, and you get a little letter in the mail that says, hey, let me see your expenses for this. And you don't even know how someone got you to where they got you.
Right.
So that's, just to piggyback off of what Larry said, that's why it's very important for you to have a financial understanding of, what's going on with your taxes, who's preparing them, and how they're getting to where they're going.
Gotcha. So I know that, no, I don't know. Is there like a particular threshold or a minimum amount that one should be making a year in order to file taxes? And if so, what is that?
It's dependent upon the individual. So it's whether your filing status, whether you're single, married, head of household, which means you're the sole person of a multifamily home. And your age. So, for example, if you're a single individual under the age of 65, no dependents, if you make less than $10,000, $10,400 to be exact, you don't have to file a return. That $10,400 represents the standard deduction, which the government gives you, which is $6,300 now?
Yep.
$6,350. So there's a deduction they just give you, basically to entice you to file your return, and then the $4,050 for the personal exemptions. So for you basically being alive, they give you $4,000.
Yeah.
Being alive.
Yeah, and
$50, which all that has caps, but that's the standard. And for each situation, for each individual, it may vary, because the personal exemption may decrease depending on how much money you make, how many dependents you have, so forth and so forth.
Yep, and a personal exemption also goes up and down based on inflation. So that number is not always the $4,050 every single year. It's all based on inflation and how the economy's doing.
Okay. All right. 823-9110, 823-9110 is the number. Go ahead and get your tax questions in. When we return, we're going to get into common tax mistakes. Are you making them? And also, what is a personal exemption? Okay, if you're a millennial like me and all you know is just, filing your little taxes at the little chain, and you don't know what them people be talking about when you get a new job and they telling you to put 0 here, 1 here, add that up. Like, what is that? We're going to get into that in a bit. Make sure you keep it locked. And again, you know that number, 823-9110, 823-9110. It is Hampton Roads Voices tax season on Hot 91. On Hot 91, your choice for hip-hop and R&B soul. We're having a good time talking about taxes this episode, and I know that you guys are waiting for your tax return, or you got them back already, and we are here to really educate you on what exactly goes into your taxes and the ins and outs and all of that. Okay, so I have very special guest experts with me today. Terrion Conyers, he's a tax consultant and co-founder of PC Financial Services LLC, and Larry Pendleton, he is his partner and co-founder of PC Financial Services LLC, and he's also a certified public accountant. And we have you, 823-9110, 823-9110. Get your questions and comments in. And we do have 2 phone calls. Let's get to it. Hot 91, you're live on the air. Who am I speaking with?
My name's Juanita.
Hey, Juanita. How are you?
All righty.
All right, go ahead. What's your question, comment, or concern?
Okay, I'm just thinking about next year. I'm employed, but my husband gets Social Security disability. He's now in a nursing home, and they will start getting all his money. Will I have to file with him next year?
Can you repeat that again? I'm sorry.
I said I'm employed, but my husband gets Social Security disability. He's in a nursing home now, and his checks are now going to the nursing home. Will I have to file taxes joint with him next year?
Yes, you would still have to. Well, I say you don't have to file jointly. You could do married file separately, but since the income is going directly to the nursing home, that's not income that you would have to recognize. That would be on the nursing home.
Okay.
But you're still entitled, since you're still paying most of the fees and whatnot out of pocket. You can still claim him as a dependent.
Oh, really? Okay.
So that's something to keep in mind next year. Of the income, even if you do, because most likely they'll still send you the statement saying here's how much money came in, but all that money is still being pushed out to as a medical expenses.
Yep.
Okay.
Yep.
Thank you, Juanita.
Okay, thank you.
All righty.
Bye.
Let's keep this calls going. 823-9110, 823-9110. Hot 81, you're live on the air. Who am I speaking with? Hot 81, you're live on the air. Who am I speaking with?
This is Wes. How y'all doing?
Hey, Wes.
I'm good. So a couple questions. Mm-hmm. One of which, what's the ultimate difference between filing with, say, a TurboTax, so you can do it online yourself, or going to an H&R Block? The immediate difference, I pick up on, obviously, is how much you're going to spend for filing. You might spend $75, $80 with TurboTax. Go to H&R Block, you're going to spend over $200 or something to that effect. So that's one question. And the other one is, is there a problem with filing, say, every other year?
So the first question, the difference between doing it yourself as opposed to going to a tax professional, right? So
right.
It all depends on your financial situation and your financial need. A lot of times, some people have very simple lives and very simple things that they have going on. So all they really need to do is put in their W-2 into tax software and hit file and complete. But other people have, different things going on, kids living away, or, splitting joint custody. It's a lot of different things that go on in people's lives that they'll need some kind of professional consultation or support on. And that's where, a tax professional comes in. So it all really depends on what your personal situation is, as far as your living situation, whether you have a small business, whether you're making a certain level of income, and you basically are being overly taxed you can go into, looking at people's W-4s. So, and a lot of times, people get into issues where one year they may be, having a withholding of 0, meaning, exempt. So they're, fully taxing themselves, and then they run into a financial burden where they need to increase the amount of withholdings they have, which allows you to get a larger check. And at the end of the year, they look and they put it in the TurboTax, and hey, I owe $5,000 this year, and last year I got a return, so then you need help, so, it all depends on, what you do during that year on whether or not you should go see a tax professional versus, filing taxes for yourself. I hope that makes sense.
It does.
Okay.
And what about, as far as skipping a year, what have you, if there's any kind of penalty for that?
It says, any type penalty for skipping years. Well, you should file every single year.
I don't really see a benefit of skipping years, because if you're owed a refund, why not get that money back? And then if you owe, you're still going to have to owe.
Yep.
No matter if you filed every other year or not. So I don't really see a benefit of skipping every other year.
No, not necessarily benefit, if there's a benefit to it, more so as if there's a penalty for it.
There's a penalty. There's always going to be a late fee, whether you owe or get a refund. But then if you owe and don't pay by that particular due date, then you're tacking on interest and additional late fees on top of that.
Yeah, and I think we talked about it earlier in the session. Of course, there's a 0.5% of interest.
I'm late to the show.
Oh, I'm sorry.
Late to the show.
That's cool.
I caught you all while I was driving home from work. So,
So for every single month, there's a 0.5% of interest that's added on to the amount that you owe, in addition to other penalties and things that you may have. So if you let that go for a year, that's 12 months of interest at a 0.5% on whatever you may owe, and it's compounded interest. It's not interest on the initial amount; it's interest on the interest, basically. So you just have to be mindful of that.
All right. Well, me if I'm wrong, but you had started a business with doing taxes. Is that correct?
Yes, sir.
Okay.
Yes, sir.
Wes?
Yeah, I'm here.
Oh, okay.
Yes, sir.
Yeah,
we've been doing it for about 3 years as a team. Individually, we both have nearly a decade each of experience of doing it solo before coming together. So we decided to partner up and see how we can help people out with this.
Okay.
Yes, sir.
And your business is called what again?
PC Financial Services, Pendleton Conyers. Yes, sir. Pendleton Conyers Financial Services. So PC Financial Services.
PC Financial Services. Okay.
Yes, sir.
All right. Well, I'm gonna look you guys up. I'm gonna probably have to come pay you all a visit before tax season is over with.
There you go.
Yeah.
Check us out. We'll take care of you.
We're gonna put their information on our Facebook page. Okay, Wes?
All right.
Have a good
Y'all
one.
enjoy the evening.
Thanks
You too,
for
bro.
calling. We're going to keep those calls rolling in. We have one more. Hi, Nate One, you're live on the air. Who am I speaking with?
Devontae Moore.
Hey, Devontae Moore. How you doing today?
I'm doing all right. Hey, first, before I ask my question, I want to say you guys do a great job. I listen to y'all every morning, even before you guys come on the air, like 5 o'clock. That's what time I get up.
Oh, so you listen to me?
Yeah.
Yep. Thank you. I appreciate that, Devontae.
I listen to you going to work and listen to you coming home, too. So
Appreciate you.
Yeah, no problem. All right, so I don't really have a tax question. My question is it's about credit. Can you guys like answer stuff about that too, like buying cars and like give financial advice about that?
Yeah, go ahead and shoot, Devontae. Only because you buttered me up before you asked this question.
That's what's up. So I'm looking into buying a car, and I want to shop around. My question is, if I go to one dealership, they're going to run my credit, right? And, obviously if I'm not cool with the car or, want to go with them, I'm going to go to another dealership, basically shop around like I said before. And they're going to run my credit too. Now my question is that going to show up twice on my credit score? Because I went to CarMax one day, and the guy told me, the credit bureaus, when you're buying a car, they know you're shopping around, so you have up to 42 times, for them to check your credit, and it only shows up as a one hit. Is that true, or have I been deceived?
Not deceived. Can you guys answer that? Do you know anything about that?
I think that's something. Honestly, I'm not too familiar with. That, to be honest with you, maybe Larry has some insight on that.
No, I don't either. We do have financial advisors that we could refer you to offline, and they can definitely help you out with that.
Yep.
I have one person in mind that I can think of that can definitely help you out with that question, so we can get the information to you.
You want to hold on, Devontae?
Yeah, I will.
Okay,
yes,
stay on the line. All right, so we have some more show for you. It is Hampton Roads Voices tax season. We're helping you out with your taxes. I don't want you to go anywhere because when we return, I'm telling you about unmarried dependent students, college students. Should you be filing? Should you not be filing? And all that stuff is coming up in a bit. We have special guest experts, Terrion Conyers from PC Financial Services and Larry Pendleton from PC Financial Services. All right, so make sure you keep it locked. It's Hot 81. Hot 81, your choice for hip-hop and R&B soul. Hampton Roads Voices is live right now. We're talking about taxes. Yeah, this episode is entitled Tax Season, and we're letting you know the ins and outs and all about taxes. Okay, so I have special guest experts with me today. Terrion Conyers, he's a tax consultant, and he's the co-founder of PC Financial Services, LLC. And I also have Larry Pendleton. He's a CPA, which is a certified public accountant, and he's also a co-founder of PC Financial Services, LLC. And they have been answering your questions and making sure that you are good to go this tax season. Now, they say that taxes, your deadline to file for your taxes is Tuesday, April the 17th. For your federal, and then I didn't know this, but the state, Virginia, has a deadline as well for your state taxes, which is May the 1st. But go ahead and get everything in by April the 17th so you can be good to go. 823-9110, 823-9110 is the number to get your text questions in, because I know that you have some, and you guys been asking some really, really good questions. Don't forget that we're going to have this episode on our YouTube page, Hampton Roads Voices on YouTube, just in case you're getting out of your car, you're tuning in late, all that good stuff, and you just want to listen to the whole entire show to get everything, all the knowledge that you can. Okay? That's going to be up sometime this week. So let's hop back into the conversation, fellas. Personal exemptions. I can kind of use context clues to figure out what that means, but, I'm a millennial and I'm lazy. So I'm just going to ask you, what is a personal exemption? What does that even mean?
So when you get hired for a job, you get a W-4 and a VA-4. W-4 is for the federal, VA-4 is for the state. And as you add on exemptions, so basically every exemption that you add on to your W-4 and VA-4, those are less taxes being taken out of your paycheck. So you may not be claiming anybody. It's a difference between who you claim in than just exemptions. Okay. So if you want more taxes taken out, you want less exemptions. So a lot of people get refunds because they have 0 exemptions, or they just have 1. And they're getting taxed to the full amount, and at the end of the year they get a refund, or basically get their money back. I don't really like calling it a refund. You just get your money back.
Well, some of your money back.
Some of your money back, because they still tax you on the income that you make anyway.
Yep.
At year end, based off your W-2. But then if you can balance it out and you want to increase your exemptions, then you'll have less taxes taken out. What we try to explain to our clients, like, tax season is never just January through April. It's full year around, because there may be situations, and Terrion brought this up earlier, that you may need more money throughout the year, so you may want to increase your withholdings or your exemptions.
Yep.
But you have to track that back so that you don't have to owe a bunch at the end of the year.
Yeah, so, kind of like he said, and people use the word refund when it's really your money. For example, when people have, a 0 exemption, meaning that you're getting taxed at the highest tax threshold possible. A lot of times, you can see people who, may get the federal government $8,000 to $9,000 to $10,000 worth of money throughout the year, and then they get very excited when they get back $2,000, $2,500. Well, the government just made $7,500 for free, basically, and they just gave you, hey, give me $10,000 throughout the year, and then I'll give you $2,500 at the end. That's not a good deal. So some people, what they do is they make adjustments to their exemptions. They may claim 3 or 4, saying I have a household of, 3 or 4 people, meaning I need more money throughout the year. And they get more money during the year and they pay less at the end. Sometimes, if you don't find that sweet spot, you may mess around and owe, because you increase your exemptions. You instead of making $1,000 a week, you increase your exemptions to 4 and you bring home $1,400 a week. But at the end of the year, because you didn't pay as much to the federal, sometimes you owe, or you may be at that sweet spot where you break even. And that's where you want to essentially be. You want to have your, withholdings or / exemptions at the perfect number so that, at the end of the year, you didn't give them $10,000 and get $2,500 back, but you may have given them $7,000 or $6,000 and you broke even with them, So, it's all about maximizing. Some people can get it even better. Some people we've seen, they make, over the $45,000 to $50,000 and they've done some things with their exemptions and they only given the federal government $3,500 for the year. And they should have given the government $10,000 for the year, but they break even, and it's all because they understand, the whole exemption piece and, and how to move it around, because you can move your exemptions around all year. And we have a lot of people who have jobs in sales where they get bonuses. So what they'll do is they'll go exempt from all exemptions. So you'll get the full check for those. And if you don't know what you're doing, you can owe a lot at the end of the year. But if you do know what you're doing with your exemptions, right after that, you can kind of break back even. So
you guys should do a class. And
there are classes.
That's
for
a lot.
It's a business. We actually know a person who has a W-4 and / exemption business where they really show you how to work your exemptions, because it's very, very financially beneficial for you. It's huge, actually. It's a business that someone has created.
Interesting.
It's very interesting.
Now, unmarried dependent students, those who are college students, particularly full-time or maybe part-time, should they be filing their taxes?
It depends on the situation. And if I keep
so
saying
let's go with the traditional student. So like 18 to 22-year-old student who has a little job, but clearly they're not making $30,000 a year. They're in college, and of course they're unmarried, and their parents probably still file them as a dependent because they in college. So what about that particular situation?
And so in that situation, you don't have to file a return because it depends on how much money you did make. If you're under the standard deduction, then you don't have to file a return, but it still may be beneficial to you, because even though your parents claim you and you're ineligible for many tax credits as a student, because your parents get that tax credit, like the American Opportunity Act. What you can do is still file if you're getting state or federal taxes withheld from your paycheck.
Yep.
So you can still get your money back.
Yep.
if you're working and getting taxes taken out. But if not, and you're making less than $5,000 and your parents are filing you and you're under 24, and it's not truly worth it. Yeah, no need.
Yeah, I was filing taxes when I was because I was working and
hustling.
And hey,
right.
let me get that back. Okay,
no doubt.
All right. So, is there an age limit to the dependent that you are filing? So, I would say no. You kind of answered that question when we had a caller, and you said that she could file her husband as a dependent. So, yes. Is there an age limit?
So there's qualifying child, and then there's qualifying relative that can fall into a dependent range. So to be a qualifying child, there's different age restrictions. If you're under 19, then you can claim that individual. It doesn't even have to be your birth child. It could be a stepson, cousin, niece, as long as you can prove that they're below 19 or younger than 19.
And you're taking care of them?
Yeah.
And you're covering at least 50% of their support.
Yep.
Then you can claim that individual. Now, if that person's in college and they're under 24, you can still claim them, but they have to be a full-time student, which means they have to be taking at least 12 credits a semester. Yep. But then if your child is disabled, fully permanently disabled, then there's certain you could potentially claim them no matter how old they are as a qualifying child, depending on the severity of the disability, and then how old the individual is as well. But then there are also qualifying relatives. So let's say you have to take care of your parents, and they may not even have to live with you, but if you're covering still more than 50% of their support and they're making less than $3,700, then you can claim the individual as a qualifying relative.
$3,700 a year?
Yes.
Yep.
And most likely it's like retirement, because mainly it's focusing more on the individual retired or the disabled. You're taking care of a parent, so they're not bringing in much money. They may be bringing in Social Security check, which probably isn't much, depending on how much they made throughout their life. So that's why. And then the reason why there's qualifying child and qualifying relative is because there are additional tax credits and deductions for qualified children, not for relatives. But you still get a personal exemption on your 1040. So as we discussed before, you as an individual, you get $4,500 personal exemption depending on the amount of income you make. Each person that you claim on your tax return, that's an additional $4,050 on your tax personal exemption that you can deduct. And I say it all phases out. There's all reductions into it. And it's never as black as white as we try to explain, because every situation is different. And the reason why we try to have one-on-one meetings with our clients.
Yeah. That's why you need to come see us. That's the reason.
Okay. Yes, go pay them a visit, because it gets kind of tricky, I see. All right, so 823-9110, 823-9110. I know you have some tax questions, and these fellas are here to help you out with that. We're going to be getting into retired citizens. Hey, do you have to pay taxes? We kind of had a question earlier about a retired a sailor, a retired lady from the Navy. She wanted to know some questions about, her retiring pay and things of that nature. So whether you retire from the military or retire in general just from working, and you want to know, should you tax that or should you not? We're going to let you know about that. Also, the healthcare reform and how that affects taxes, because it definitely does. All of that is coming up in a bit. Make sure you keep it locked, and make sure you give me a call, 823-9110, 823-9110, or hit us up on our social media if you don't feel like calling in, but you want to type that question in. Hashtag HRV for Hampton Rose Voices. Hashtag HRV, and just ask your question. It's Hot 91.
Why do most people spend their tax money irresponsibly?
Because they haven't been taught how to spend, how to save.
Most people spend their tax money irresponsibly because they not used to having a large amount of money.
Because, majority of the year they don't have the necessities that they need to, go through everyday life. Like, let's say they have backed up bills or whatever, so when the tax money do come, they pay what they need to pay off, and then they see, I have extra money so I can do what I want.
I think that most people spend their tax money irresponsibly because if they wanted something, in the past that they couldn't get at the time, they saved up for that, and then, they feel like they have it and they don't save it, so they just be spending frivolously and not, putting money aside.
When people are not used to having a large amount of money, they just spend it on things that they've been wanting for a long time, or just unnecessary things.
They just see it as, an extra paycheck to spoil themselves.
And if nobody teaches you, you just won't know how to let your money make money for you.
Hot 91, your choice for hip hop and R&B soul. HRV out and about. Yeah, they went out and about to ask you about these taxes. Okay, shout out to the public affairs production team. Yes, those my babies. All right, so 823-9110, 823-9110. This is a brand new episode of Hampton Rose Voices. It's called Tax Season, and we're getting you together for this tax season. Not only just you dropping off your W-2s and your W-4s, and you just like, all right, make sure I get some money back. No, it's really knowing what's going into it, making sure you're trusting the right person, and all that. We have special guest experts, Larry Pendleton. He's a certified public accountant and the co-founder of PC Financial Services LLC. And also Terrion Conyers, tax consultant, and also the co-founder of PC Financial Services, LLC. And like I said, we have you. 823-9110. Let's go to the phone lines. Hi, 91, you're live on the air. Who am I speaking with? And thank you for holding.
Yes, this is Katrina Hines.
Hey, Katrina. How you doing?
I'm fine, thank you. How about yourself?
I'm doing great. What's your question, comment, or concern?
Okay, my question is, I heard them speak about the full-time students who live at home or live away and the parents provide most of their support for them. What about the child that still lives at home who has a part-time job? How are they? Do they file or do you carry them? How does that work?
Good question.
How you doing, Katrina?
Katrina,
hello?
I can't hear you.
Can you hear him? Try again.
Hello?
Hello?
Okay. All right.
Oh, so you say you have a child at home that works full-time?
Part-time.
Or part-time?
Part-time.
So it still depends upon the age of the child.
She's 20.
She's 20, so she's over 19, so the government sees her as an independent. And then depending how much money she makes for the whole year, I believe the threshold right now is $3,700. If she's making less than that, then you can claim her as a dependent. But if she's making more than that, she will have to file herself, especially if she's making more than $10,400, which is the standard deduction plus the personal exemption.
Yep.
Okay.
How you doing, Miss Katrina?
Hey.
I know who you are.
You know who I am?
Yes, I do.
That's Terrion.
Okay. I know.
Oh.
I'm so proud of you, Terrion.
Oh.
Yeah, I know Miss Katrina.
That's my boo.
Oh.
All right.
Love you back.
Thanks for calling, Miss Katrina.
All right, y'all. Have a blessed evening.
You too.
All right, bye-bye.
We're going to keep those calls going. 823-9110. Let's get to our next caller. Hi, T1. You're live on the air. Who am I speaking with?
Corey Bonner.
Hey, Corey Bonner.
Hey, how are you?
I'm doing great. What's your question?
Great.
First of all, thank you for holding. Appreciate that.
Thank you. Uh-huh.
What's your question, comment, or concern?
Well, I just want to say to Larry and Terrion that I'm so proud of you guys.
We appreciate it.
Thank you.
Yeah, man, I'm so proud of you guys that you're moving positively. My question is, as far as the new tax deductions are concerned that changed back in January, what kind of adjustments should we be making to our allowances as far as our checks are concerned now? Should we change that or should we leave it the same?
Yeah, I would say monitor it. Just constantly monitor. There's a website at the IRS, on the IRS website. They actually have a W-4 calculator that you can use where you can kind of put in how much money you made throughout the year. You put what taxes been paid out of your paychecks, and can kind of estimate where you're going to be at, because the deductions, the standard deductions are planning to double, and then everyone is dropping down a lower tax tax bracket by 2%. So I said changing it, I would say more of monitoring, because you may not have to change it to what Terry was talking about earlier. It was kind of like finding that break-even point where you're not getting a huge refund and basically you overpaid the government and you're not owing a lot of money at year end because you didn't pay enough.
Yep.
Right.
Yep. So basically, use that IRS website with the W-4 estimator, or get with your local tax professional, and they can kind of walk you through where you should look like. I mean, you're doing a great job by thinking about next year. A lot of people are not thinking about next year, not thinking about, some of the things that they have going on in the future. I know we talked about that off air about, some of the circumstances that people have.
Absolutely.
Right. Okay, well, you guys keep up the good work, and just know that our Booker family is proud of you.
We appreciate you. Thank you so much.
Thank you.
All right.
That's what's up. All right, well, one more call, and then we're going to get more into earned income tax credit. What the world is that? Hi, 821, you're live on the air. Who am I speaking with?
Yeah, hey, this is Rick.
You said Rick?
Yeah, Rick from Portsmouth. How you doing?
Hey, Rick from P-Town. I'm doing great. How are you?
P-Town. Great. Hey, I had a question about what kind of criteria can I use, like, without, instead of, I'm filing single and zero, so, I get a good refund at the end of the year, but I'm trying to figure out I want to be able to get most of my money during the year, utilize most of my money, and just get a refund back. I don't want to have to owe them, but I don't want to have to pay so much taxes during the year. What kind of criteria can I use to figure out how much I need to pay during the year?
Well, the criteria is really based upon what other deductions you have, including the income that you make. So you may have some additional deductions, whether it's medical expenses.
Well, I don't have one. I'm retired military. I get a military retirement. I pay taxes on, plus I get a regular job, and I do.
Mm-hmm.
So I own a house, so the basic deduction, like mortgage interest. Mortgage, yeah. But I pay a lot of taxes during the year. It seems like instead of getting a big refund at the end of the year, I want to be able to get most of my money during the year, so I can maybe invest it otherwise, and then get a small refund at the end of the year. But I don't want to have to pay them at all.
Understood.
So I'm trying to figure what kind of criteria should I use to figure out how should I do it? How should I?
It's not truly criteria per se. It's figuring out where your income is going to lie by the end of the year. Like if you have an understanding of like how much money you're going to make by the end of the year, then I say talk to your tax professional or go to the IRS website and determine put in what your income is for what you and then for your W-4 information, and then decide, okay, if I do one exemption and go from 0 to 1, how I'm going to look by the end of the year, or if I go 0 to 2, and like how can I still get more money out of my paycheck and still not have to owe them by the end of the year.
Yeah. So the IRS website will be able to help me out with that.
Yes, sir. Or your local tax professional, either one.
Yeah, I usually do. I started doing it myself now through a formula with TaxSlayer.
Yes, sir.
TaxSlayer system that I use.
Mm-hmm.
Yeah, I started doing it myself through the TaxSlayer system, which has been good.
Okay.
But so you said that so the website, just punch it in there.
Yeah, or you can come. You can come see us as well. Either way, we'll help you out.
There you go.
Okay. I'll come see you guys then.
Okay, come see us.
Okay, that sounds great.
All right, thank you for calling. And keep listening because they're about to put their phone number out, okay?
Yes, will do.
All righty.
Thank you.
So if you're about to get out of your car and, you want to know how can you get in contact with PC Financial Services, LLC. Brothers, if you can throw out that number for me.
My phone number is 757-779-9214.
And you can reach me at 757-535-8592.
One more time, both of you.
757-779-9214.
757-535-8592.
And their website is pcfsva.biz. I got biz, but you said .com earlier.
We own both.
Okay, cool. So that's P as in Paul, C as in cat, F as in Frank, S as in Sam, VA.biz or .com. All right. And that is PC Financial Services, LLC. We still got some show to go. Make sure you get those text questions in 757-823-9110. Listen, black people, it's important that we are in control of our finances. You know, if you listen to Hampton Roads Voices, we're always talking about money. Okay, we don't have about 3 shows about the black dollar because I want you guys to be in control of your money. And income taxes are no different, okay? Let's just not drop off our W-2s and W-4s and be like, here, you do it. I don't know what's going on. No, let's be in control and in the know of our finances. So make sure you keep it locked. In a little bit, I'll be telling you about retired citizens. And if you actually have to pay taxes on that Social Security, it's Hot 91.
Do you feel like you spend your tax money irresponsibly? Now, be honest.
No. I always have money in my pocket.
Yes, I do, unfortunately.
No. Actually, no. I make a list of things that I want, and if I can't get it at the time I would spend my tax money on that.
Normally, I save it. I got my tax money back, about a month ago, and I still got at least half of it.
If I do spend it irresponsibly, it's usually on food that I can cook at home. I like to eat out.
Is Hampton Roads Voices on Hot 91.
What is the best purchase you ever made with your tax money?
Ooh, the best purchase.
My graduation stuff. My graduation fees.
I bought a car.
I invested in a GoPro.
A small investment.
I mean, I wanted to go on vacation. I ain't been on vacation in about a year. I didn't treat myself, so I went on vacation. My plane ticket, so that's how I paid for it.
I invested in stock and bonds, and I never ever knew what that was until I just Googled it.
981, your choice for hip hop and R&B soul. We're here at the tail end of this episode of Hampton Roads Voices. Tax season. We really appreciated everybody who was calling. And this one last question that I do want to get out because, we kind of need to know it. So as far as the healthcare reform and taxes, how does that go hand in hand? I'll try to be a little bit more specific. So if you don't have healthcare insurance, how can that affect your taxes?
So if you don't have healthcare insurance, there's a penalty of either 2.5% of your income or $695, whichever is greater.
Yeah, and I think the cap is like $2,035 max.
Okay.
On that, and it's pretty big actually. For a lot of people coming out of college on your mom's or your dad's insurance, and then you go into a job, and it may be a job where you're being 1099, which is basically an independent contractor. You don't have any insurance or anything of that nature. They're just paying you basically a certain, rate, and they don't give you any benefits.
Right.
So some people have those jobs, especially people who go into some of the fields like home health care, or they go into social work and things like that. Some of those agencies and things, they do a lot of 1099s and things like that. So sometimes people don't go get insurance through the government market, or go get Obamacare and things like that. So when they do their taxes, and you ask them, hey, do you have health insurance and things, and you have to check that no box, that's a huge blow for you to lose 2.5% of your income, or $695 minimum.
So does it matter, I'm sorry, you was about to say something, but does it matter if, for, 5 months out of the year I didn't have it, and then now that I do have it, does that affect it in any way?
The main thing is at the end of the year, at 12/31 over every year, as long as you had insurance, then you're covered.
Okay.
And the main thing is we try to explain to our clients, the government is trying to get you to do something with every tax law that comes out. Like they want people to be healthy, so that's why you can write off medical expenses. And that's why they penalize people for not having medical insurance, because they're trying to get you to do something. They're leading you a certain way.
Encouraging good behavior.
So yes, they're trying to. So basically, every tax law in the code is trying to get the public to do something.
Right, like own a business.
Yes.
But what if they don't want to do that? You know what I mean?
Yep.
Okay. Well, I say that this has been a great conversation. I really enjoyed you guys being here. And again, if you can throw out your information, everything in regards to, if you have any social media, throw that out. Your website, your phone numbers, and of course your business name. Go ahead, for me.
The business name is PC Financial Services. So that stands for Pendleton Conyers Financial Services. Our website is www.pcfsva.com. We have a Facebook page. It's labeled PC Financial Services as well. My phone number, I'm Terrion Conyers. My phone number is 757-779-9214. And once again, 757-779-9214.
And I'm Larry Pendleton. My number is 757-535-8592.
And like I said, that is going to be on our Facebook page. So if you're driving and you're like, oh, girl, I cannot get that. I can't write that down right now, Kilo. All you have to do is go home and look us up on Facebook, WNSB Hot 91.1 FM, okay? Or at Hot 91 online. Thank you so much for listening. Thank you for all who called in and chimed in. We really appreciate it. Don't forget that this episode will be re-airing on this coming Sunday, Resurrection Sunday. Yes.
Thank
Hallelujah.
you, Key. We appreciate you. We just want to say thank you. We appreciate the opportunity.
Yeah, no
Thank you so
worries.
much.
Thank you for being here. I really appreciate it. So tune in Sunday at noon. Noon to 2 is when this show will be back on. And then don't forget to subscribe to our YouTube channel. Subscribe. Hampton Roads Voices on YouTube, and you can get this particular episode Wednesday, Thursday, the latest. All right? So once again, thank you, Terrion. Thank you, Larry.
Thank you.
You guys have a great one, and you have a good one, and I'll see you next week, Hampton Roads. It's Hot 81. The views and opinions expressed on this program are not those of Norfolk State University or WNSB FM.